Welcome back to this week's edition of the Risk Spotlight Operational Risk News Update. My name is Emily Jones, and today I'll be bringing you essential updates and insights from the world of operational risk, drawn from the past week. All information shared here is sourced from the Risk Spotlight portal, the premier forward-looking service dedicated to operational risk content. Let's get started. The first update is about a recent cybersecurity stress test conducted by the European Central Bank. The ECB's test, covering 109 banks, found that while Eurozone banks have improved their cyber defenses, 28% still struggle to detect attacks quickly, and 40% take too long to respond. Highlighting concerns like recovery from attacks and third-party security risks, the ECB noted that smaller banks sometimes outperformed larger ones in cybersecurity. The ECB did not name the banks examined and provided very few details of the sector's exact weaknesses, saying this was so as not to give hackers an edge. The next update is from the IBM Cost of a Data Breach report. The report highlighted that cost of a data breach have skyrocketed by 10% over the past year, reaching a staggering average of USD 4.88 million. This marks the most significant increase since the onset of the pandemic. The primary drivers behind this surge include business disruptions and the extensive costs associated with post-breach customer support and remediation. With the ever-evolving landscape of cyber threats, it's becoming increasingly crucial for businesses to bolster their defenses and minimize these disruptive and costly events. On a brighter note, organizations leveraging AI and automation in their security operations are experiencing significant savings. By integrating these advanced technologies, companies have managed to reduce breach costs by an impressive USD 2.2 million on average. AI and automation facilitate faster detection and containment of breaches, drastically reducing the overall expenses. This highlights the importance of investing in cutting-edge security solutions to not only enhance protection, but also to mitigate the financial impact of potential breaches. However, the shortage of skilled cybersecurity professionals is an exacerbated issue, with more than half of breached organizations grappling with severe staffing shortages. This shortage, which has increased by 26.2% from the previous year, correlates with an additional USD 1.76 million in breach costs. The challenges don't stop there. Breaches involving stolen credentials take an average of 292 days to contain, significantly longer than other types of attacks. Nearly half of all breaches involve customer personal data, underscoring the critical need for robust data protection measures. Moreover, shadow data breaches, where data is stored across multiple environments without adequate tracking, result in a 16% increase in costs, while malicious insider attacks emerge as the costliest, averaging USD 4.99 million. These insights underline the multifaceted nature of cybersecurity challenges that organizations must navigate in this increasingly digital world. The next update is about Australia's new approach to combating ransomware. Australian companies will soon be required to report ransom payments to the government, aiming to improve visibility and develop more effective strategies against cybercrime. This policy could incentivize businesses to strengthen their defenses rather than paying off attackers, marking a significant shift in Australia's cybersecurity landscape and potentially setting a global precedent. The next update is about the alarming rise in AI-powered identity theft. A recent report by SlashNext highlighted a 340% increase in such cybercrime, with criminals using advanced AI tools like deepfakes and voice cloning. This surge has led to a 1,740% rise in account takeovers and a 3,000% spike in synthetic identity fraud. In the U.S., 33% of adults have experienced identity theft, costing $43 billion in 2022. Experts emphasize vigilance, strong authentication, and caution in sharing personal information to combat these threats. The next update is about a record-breaking ransomware payment. In early 2024, a Fortune 50 company shelled out a whopping $75 million to the Dark Angels ransomware gang, setting a new record for ransom payments. This eye-popping figure was reported by Zscaler Threat Labs and confirmed by Chainalysis. It's a significant jump from the previous record of $40 million paid by insurance giant CNA to Evil Corp. The Dark Angels, who've been active since May 2022, are known for their big game hunting strategy, targeting high-value companies for massive payouts. They've hit some big names, including a $51 million ransom demand from Johnson Controls. These cybercriminals use a mix of Windows, VMware ESXi, and Linux encryptors, and they're not shy about threatening to leak stolen data if their demands aren't met. It's a stark reminder of the growing threat and financial impact of ransomware attacks in the corporate world. The next update is about a surge in cyber attacks targeting web applications and APIs in the Asia-Pacific region. According to a recent Akamai study, these attacks have increased by 65% over the past year, with 4.8 billion attacks recorded in June 2024 alone. This spike is linked to the rapid digitization of economies in the region, affecting Australia, India, and Singapore, with financial services and commerce sectors being prime targets. The study also revealed a five-fold increase in Layer 7 DDoS attacks, totaling 5.1 trillion. With upcoming elections in APAC, there's concern that hacktivists may disrupt democratic processes. Experts urge enhanced cybersecurity measures, emphasizing robust DDoS mitigation, infrastructure redundancy, and public education on cyber threats. The next update is about a warning from the Consumer Financial Protection Bureau, CFPB. The regulator warned that confidentiality clauses in consumer financial contracts may be illegal if they prevent consumers from sharing truthful experiences. This concern is significant in the U.S., where 37% of the top 50 depository institutions use such clauses. CFPB Director Rohit Chopra stated that silencing consumers undermines market competition and the Bureau's ability to detect legal violations. The CFPB fears these clauses may discourage consumer complaints and survey participation, hindering its supervisory and protective efforts. The next update is about the digital arrest scam reported in India. The scam involves scammers impersonating government officials via video calls to extort money from victims. Significant financial losses have occurred, with one citizen losing $72,000 and another $99,000. Scammers use fear tactics and fake offices to pressure victims into paying. The Indian government has issued public alerts and guidelines, urging citizens to report suspicious calls to the Cybercrime Helpline. The Indian Cybercrime Coordination Center, I4C, has blocked over 1,000 fraudulent Skype IDs and is working with companies like Microsoft to combat these scams. Now let me provide a quick update on key operational risk loss events that were reported in the media last week. The recent CrowdStrike outage event continued to dominate the coverage last week. The latest updates reveal a class action lawsuit from shareholders who allege the company misled them about its software testing procedures, resulting in a 32% drop in share price and a $25 billion market value loss. Delta Airlines reported a $500 million loss and is considering legal action, while CrowdStrike has committed to improving its software testing and deployment processes to prevent future issues. The next update is about Microsoft experiencing a significant outage on July 30, 2024, caused by a distributed denial of service attack targeting its Azure cloud services. The attack led to a 10-hour disruption, affecting various Microsoft 365 products, including Office and Outlook, and impacting several enterprise customers globally. The next update is about a major ransomware attack on Edge Technologies in India. The attack, attributed to the RansomX group, disrupted services for around 300 small banks, affecting key payment systems like UPI, NEFT, and ATM withdrawals. And there you have it. A whirlwind tour of last week's operational risk landscape. If you want to read more about the topics I have covered and review additional content on emerging operational risk topics, then please log into the Risk Spotlight portal if you are a subscriber, or go to RiskSpotlight.com to sign up for a free trial. Thanks for tuning in, and until next time, stay safe and keep those risks in check.